Hi, this is Kerry Artac with Artac Advisory, and this is a brief video on what's going on presently the week of Monday, September 27th, 2021, in both natural gas and heating oil futures. I do follow these markets. I have private consultations with some clients who spend time with me on Zoom calls. That is available, by the way. I have been offering consultation services now for the better part of a year, and we could go over these charts privately. I don't have these on a daily basis. There's just not the demand. For me to do a daily letter, I require at least a half dozen subscribers to sort of justify the time involvement. I have a daily crude oil letter that I've been putting out for years. And I'm actually going to show you a weekly chart of crude oil as of Monday's settlement, September 27th, where we actually pushed through a significant long-term resistance area. The question is whether we'll close the week above that area, and I'll get to that in a moment. But right now, you're looking actually at a natural gas monthly continuation chart, active continuation, meaning it rolls with volume. In other words, right now reflects November. When December volume exceeds November by a day or two, December will land on this chart. They're very closely priced. I'm just letting you know because, that is going to happen in a few weeks. Let's zoom in here and take a look at what's going on in terms of this 5.929 formation. That is a channel top going back almost 10 years. I mean, it comes off that 2012 low, 9 years anyway. 5.929. We pushed through it on Monday, the 27th of September by just a bit, backed off, closed just below it. 5.929 is our ceiling through the rest of the year and possibly well into next. This is an area where the market can fail. I don't think it's going to sell off quickly from here. I do think we can certainly back off within a few weeks, back to that 4.425 to 863 area, which is, the more important is the horizontal structure at 4.863, which drops to 4.862 in October. But that rising channel top is also a meaningful support at 4.519 the entire month of September. 4.425 the entire month of September rises to 4.519 all of October. Remember, these are monthly charts. I'm doing the monthly charts because of the convenience, really, that I don't have to update soon. I could take all the way into later October, perhaps, to give you these numbers, and you can see the rate of change of these formations. So if I don't cut a video on these markets later October, you can ascertain where these levels will be pretty closely for the entire month, of November and December, so forth and so on. But 5.929, able to contain buying through the balance of the year and well into next. Over the next few weeks, assuming we continue holding below it, we should fall back into that 4.519 to 862 region, which is where they will be in October, the convergence or the growing convergence of those two channel formations. The way I would phrase this, actually the way I phrased it a week or so ago when we had the settlement above the 4.863 horizontal channel top, I mentioned bullish into October above 4.863, and we really don't turn bearish into October unless we settle below 4.425, and that area narrows a little bit for the entire month of October. Once again, 4.519 to 862. Closing below 4.519 would be my indication we have, in fact, placed a good annual high, and the market can fall back, down into the 2.5 area over the following months. But I'm not here to tell you what that target would be. You have to kind of take it at the time. Anyway, 5.929. This is also the threshold to violate for turning this into a real sort of hyperbolic rally. You can go back into this chart in 03 and 05 and 08. We had some incredible spikes, and we may be in the midst of one of those right now. That is confirmed, as far as I'm concerned, with a weekly settlement above 5.929. Now, FYI, weekly settlement is fine. This is a monthly chart. These formations come in very closely on the weekly. And in fact, I think you need to do the 1% rule on this. So, you close at 5.930. That's just above that formation. But 5.929 times 0.01 plus 5.929 is 5.988. So I'll put that on the video here. That is the 1% violation. So if you want to be, careful with this before getting long, that would be a settlement. I think any daily settlement, any weekly settlement, any daily settlement certainly is actionable. You just want to follow up the weekly settlement of 5.988 or higher, or wherever the 1% violation is on that channel top over time. And if we get that, a daily settlement, you go long. You want to follow up on Friday that we close above the 5.988 or the 1% violation of 5.929. And then, it looks to me like in pretty quick order. I mean, we've got precedent for 3 to 5 months here. But nonetheless, it could take 5 to 8 months. But I think that aggressively, we should reach into the 10 and a half area, let's just call it. You can see you've got a full channel extension of this 5.929 channel up at 10.578. And you also have a descending long-term 2/3 speed line that is in the same vicinity. And so that becomes the objective, and it may be realized quickly. I put the 6.493 level out there just so you know that is the 2014 high. And we could stop. We could top out there for a week or so. But any weekly settlement above 5.929 by a 1% margin, that's a green light for aggressively higher price activity through the rest of the year. So once again, holding below 5.929, this market can ease back over the next week, 2 or 3, given the heightened volatility, into that 4.519 to 4.862 area, where it will be for the entire month of October, and that begins next week. And then if we close below the 4.519 rising channel top, a good annual high, the market then expected to ease back on a continued basis through the rest of the year and even into early next. I think that kind of summarizes it for natural gas. Let's move on to heating oil. Heating oil, similar dynamic in that it has not tested that channel top. And there are different structures here, but that channel top at 2.3255 the entire month of September drops ever so slightly to 2.3220 the entire month of October. That is a full 5, 6, 7 years in the making. It is an annual containment resistance level. We can test it and back off, well into next year from here. But if we close above 2.3255 by a 1% margin, and what is that? I should have done this before I shot the video. Hold on, 0.01 plus 2.3255 equals 2.3487 is a 1% violation of 2.3255. So once again, closing any day at 2.3487, you want to follow up then by the weekly settlement above that same 1% violation of this channel formation. And then this is the November contract once again. And like I say, when we roll to December in a few weeks, December will land on this chart. But if we get the buy signal above it, push through that area, close above it by a 1% margin, even on a daily basis, it's not really jumping the gun. It's definitely early stage. So there's more risk there, of course. But closing the week then Friday at 2.3487 or higher would then indicate, and this is a monthly chart. I'm sorry, this is a weekly chart. I'm sorry, this is a monthly chart. I'm going to cross that weekly out. I converted this to a monthly chart right before I shot this video, and I did all the analysis for the month. So sorry about the back and forth there. This is a monthly continuation chart. So, looking at this chart, I'm going to say 3 to 5 months. An accelerated rally, 2 to 3 months perhaps. I'm going to say 5 to 8 months at the most. So possibly by the end of the year, into late winter, early spring of next year, we would then reach the 2.9284 formation. And that is significant. It can contain buying all of through 2022, and not until or unless we settle above that 2.9284 formation am I comfortable saying that this market is then likely to reach 3.5966 or wherever that formation. So it's very stair-step, but I can say this, closing any day and then followed by a weekly settlement above the 2.3255 formation. The 1% push is 2.3487, would be an indication of aggressive bullish follow-through through the rest of the year into the low 2.90s. Let's talk downside for the heating oil right now. There is a rising channel bottom. Now, I look at this on a daily basis and a weekly basis. This is the monthly basis. And so it jumps aggressively next week to 1.9322 for the entire month of October. It's at 1.8497 through this week. We're not going to see that. We may see 1.9322 by the end of October, where we can bottom out through November and from there rally back up into the 2.32 region. But if we close below the 1.9322 rising channel bottom, good high into next year, quite possibly through next year. Finally, let's finish up with crude oil. I'm going to zoom in here. This formation was tested in late June, early July, and at that point resulted then in a meaningful downside pullback into the lower 60s, and now we're right back at it again. In fact, on Monday, September 27th, we settled above that formation by a 1% margin. And so that is an actionable signal on an intra-week basis. You do, nonetheless, want to see the market close above that 74.57 by a 1% margin. It did so on Monday. You want to see that happen on Friday. I should have that number in front of me. It's like 75.30. Bear with me. I'm going to do that right now. I've never done it this way before, but I appreciate you hanging in there. It's at 75.31. So if we close the week Friday 75.31 or higher, we have a confirmed long-term buy signal in crude oil, WTI, and I'm saying that over the following 3 to 5 months, we should push on and up into that 93.08 to 94.52 area. Now, once again, I do put out a daily crude oil newsletter. If you're interested in that, just holler, just reach out, and I'll include you. It's obviously an extra fee, but there's that. Anyway, I hope this was of assistance, and in October, later in October, if you want an update on these charts, just nudge me, and we'll go from there. Have a great day.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.